Good morning, everybody. It's the 13th of October. We're Signal Centre Talking Ball. I'm Joe Neighbour, joined by Steve O'Hare and Ian Coleman. Morning, guys.
Morning, all.
Morning.
You all okay?
Is that the
All
dog
good.
licking its bits in the background, Stevie? A bit too early for that.
It
Licking its wounds. Is he long on the footsie?
Longer footsie.
You all right?
Harry.
Licking his wounds.
He's
Nice. Yeah. Good.
oh yeah. Kiss a kiss, Dad.
Lively start this morning, guys.
Yeah.
Safe
Got any
haven.
reasons for that?
I'm just a day late. Said yesterday it was going to kick off. I thought yesterday was the day for safe haven. I thought the dollar was going to go bid yesterday. I didn't really know why. I don't know why it's come off this morning. Do you?
And I was just saying, we're going to pin that on anything specific. I mean, I know we've had UK employment data out, which was pretty poor, 4.5%. Is now the employment rate there. Is expecting it to be 4.3, so a little bit worse than expected.
That was quite early, though, wasn't it?
Yeah, it was about 7 o'clock. So the selling really picked up steam on the Open, on the European Open at 8 o'clock.
Yeah.
I've not seen anything.
Could it be something to do with the Typhoon Signal 8?
What's that?
Hong Kong Observatory has issued the Typhoon Signal 8 on the early hours on 13th of October, which basically has led to the suspension of Hang Seng trading.
Well, it could be it, yeah.
Now, so I presume it's that there's a big storm coming in, and let me read you the headlines. Potential signal number 8 as typhoon approaches the tropical storm Ananga edge closer to Hong Kong, bringing strong winds and rainstorms, according to Hong Kong Observatory. So yeah, I think they're sort of like locking down over there, not because of Corona, but because of the storm coming in. So
well, at least it'll keep people from spreading the disease as well.
Yeah, looks like the market is shut at the moment. So
FTSE seems to be the worst affected this morning by lots of things.
Yeah, maybe that's what has the dollar done? Has the dollar come off?
No, it's going up a little bit. US dollar.
Yeah, but is it 93.13 or is it lower?
It's 93.23.
Oh,
it's up 20.
Interesting. Bit of divergence. Yeah, I don't know. It's I think a little bit to do with that. Gold up stronger, isn't it?
Yeah, slightly. I mean, we had some US tech movement yesterday. The index, the FANG index, jumped by 3.3% for its best session in a month. So there's no stopping that. Obviously, that's been boosted by further talk of stimulus. Also, the fact that we have Amazon Prime Day starting today.
Yeah, I saw that. Yeah.
So that's for 2 days, and also we have a new Apple product being unveiled.
The 5G.
That's right.
5G stuff, isn't it?
And we've got the start of earnings season underway, so we're going to get US companies start reporting latest earnings on those.
Okay.
So that could keep pushing things, but it does look exceptionally frothy, doesn't it, on these US markets? So at some point you'd think there would be some profit taking. I mean, this is the Nasdaq index; it's just relentless. This is just an hourly chart, but what often happens when you see these patterns is they just end up being flags before they go again.
Yeah, I mean that's a evening star formation at the top there.
Yes, it is.
So
but it is only an hourly chart, so it's not particularly strong in terms of a signal.
Yeah.
This is the daily chart, just going from strength to strength.
121.50 was a flag target or a pennant target.
121.50.
12,150. Yeah.
Sorry, 12,000. Okay. Yeah, I'm not used to these indices.
Yeah, so all very strong. Lost my chart. Anybody got anything on their charts I want to look at? Steve, have you seen anything else on the indices?
Yeah, obviously the FTSE. I looked at yesterday. I bought it yesterday on the gun to the head, and looking at this weekly channel here. And obviously the start of it is maybe showing a little bit of a rejection from it, because we've had a sort of, like you said, a decent move in this overnight. This was my well, I'm down to a 5 minute. That shouldn't be a 5 minute, giving away my secrets. Yeah, this level here was really the support, and it's broken it aggressively this morning and carried on down. And so we have got plenty of room on the downside, although it has stalled and reacted from 59.60, which obviously is congestion around this levels here. So a little bit of reaction higher, but momentum still feels quite negative in the FTSE. On the daily chart, this will be a significant bearish day if we maintain these levels. Yeah. Obviously, we got the cloud looking to support around about the 58.75, 59.10 area. But yeah, sort of on the 4-hour chart again, bearish outside candle on the 4-hour chart that closes at 10 o'clock. So we've got just over an hour for that to confirm. And for me, that would be quite significantly bearish, especially if we remain below or close below 59.75, which was the previous 2 swing highs here. So yeah, back into this this sort of channel formation down to the 58 level. So yeah, running through the others. Yeah, I looked at Nasdaq this morning. That did look pretty strong again. But on the daily charts, that 12th of October candle doesn't look great. Sorry, this is 4-hour chart. That 6 o'clock candle doesn't look great from yesterday. Shooting star candle and an attempt to go high this morning has been rejected. So if we see this getting below 12,000, I think we could get a little bit of momentum. And this is the Hang Seng. This is like closed at 8 o'clock our time, shut down after a sort of like a pretty decent rally before that, and then it's sort of like shut. So I don't know. It's the China's up here as well. That's carried on trading. So it doesn't, if they're quite relative to China and the Hang Seng, so maybe nothing spectacular there. These are the bank indices I was talking, the bank stocks I was talking about a little while ago, September, when they were all the way down here. They've had a nice recovery there, haven't they?
What index is that, Steve?
The banks.
Bank?
The banks.
Oh,
all the banks, major banks. Quite a good one. Showed you it a little while ago.
I've been listening.
No, I know. It gets a bit like that, doesn't it, when you listen to me? That's why I had to take time off.
Just so I could start hearing you again.
Yeah. So, the sort of like this rally has started from the 28th of September and it's continued higher. But it's got up to these levels again. And yesterday was a bearish outside candle. The day before, Friday was a bearish outside candle. Yesterday fought back a little bit. But yeah, it's quite a good one to watch. Obviously, the banks are major stocks still at the moment.
Probably not for much longer.
No, that's it. Yeah, we'll have the use for banks eventually, will we?
No, just be tech, won't it?
Yeah.
Tech. Cool. Thanks for that, Steve. Ian, have you got anything for us on the FX side of things?
Yeah, I thought we should sort of go back to big pictures, really. Just so this is the dollar index DXY, so this is the weighted one. And I just wanted to sort of reiterate what the long-term outlook is. So we've got this bullish outside candle on the monthly chart, which offers an upward bias. If we go to the weekly chart, we've got 5 completed waves. So we're now in a choppy move higher. 96.74 is reverse trendline resistance. So I think we should be prime over the medium term. And then we've got, this is the daily chart. So we got up to this previous swing low. So it was support, it became resistance, then we move lower. So first wave in 3 waves, second wave normally in 3 waves, and then the third wave in 5 waves as far as Elliott wave is concerned. And that's when we turned around and said that it can get quite dicey and quite choppy. And if you go to this chart, which is the 8-hour chart, and you put a fib on, doesn't matter how much you go fiddling with it, you can't get a decent fib. It's pushed through or it's short of most fibs and even fib extensions. But if we go to Joe's unweighted basket and we go to this chart, and we've got a very decent support line here, and we're sort of starting to push higher. So basically, as far as Elliott wave is concerned, that is the first wave A, and then should be coming down in wave B. So this being in 3 legs, it can get up all the way up to 88.6% of this. So it can be a decent rally to the upside for the dollar index. And the reason I'm mentioning that is because I saw this, which I thought was quite interesting this morning. So basically, going bullish on the dollar, and you've got to remember that dollar's a safe haven. So if stock indices do start to move to the downside, then the dollar index should move higher. Now this is the dollar index, the normal one. And if we go out to, the boys love it when I do this, go out to a weekly chart, then the only thing that I can grab here was it was previous support going back all the way to June 2016. So it acted as support and it's acting as support again. But if we go to euro dollar, I just want to put a shorter time frame on. So again, it's reverse to the dollar index. We've got a bearish outside candle at a trendline resistance. And now if we go to this chart, which is the daily chart, we got that choppy move to the upside in 5 waves. It completed at 261.8. So opposite to what the dollar index is, we should now be seeing a move to the downside. So first wave in 3, second wave probably in 3, and then the big 5 waves down. So I'm wondering whether or not this actual wave down is going to be a bit more aggressive, because I'm getting this on the 4-hour chart, which offers quite decent risk reward. So we look for these confluence areas, or I look for these confluence areas, and this is virtually bang on at 116.72, which is a 161.8% extension level of that move, and it's a 361.8% extension level of that move. I know it's not a common extension level, but it is in symmetrical patterns, and that would form a crab all the way down here at 116.71. Off with a stop above there, is offering quite decent risk reward. Now, if we reflect the dollar bias back onto other charts or other currency pairs, euro cable has just hit a 50% fib. That could move all the way down to here, which is a 127.20, which is the 88.6, and then potentially, and keeping an eye on that euro dollar and the dollar index, obviously, a move up to back towards this sort of level. I haven't got much on dollar Swiss. Got to remember that if it's safe haven and we're buying dollars, then we're also buying Swiss. So Swiss can have a tendency to move to the downside, and obviously safe haven currencies are the dollar Swiss and the yen. So dollar Swiss and dollar yen are quite hard to chart while we have risk off being the theme. So the prime support is down here at the moment. Even though we've hit a 127.2% fib, it's a bit no man's land, I suppose. Dollar yen, I can't get anything on. Dollar CAD, again, it's just in no man's land. But looking at the dollar bias, and this is going right down to a shorter time frame, hourly chart, we've got a 423.6% fib here. Are we going to form a little reverse head and shoulders and then break to the upside? So again, it's just all about the dollar, I think, at the moment. Not a lot of drivers for other currencies.
Yeah. Okay. Cool. The only chart I wanted to bring up really was gold. Spoke about it yesterday, talking about a breakout of this triangle pattern. So long-term uptrend, consolidation here, decent breakout that we saw on Friday, and now we're in the process of possibly having a bit of a pullback, a retest of the 1900 level before a further move higher. Obviously, that will play into what Ian said with regards to the US dollar. and whether or not we are going to see some form of bottom form on the dollar index, or whether or not we are going to see a continuation lower with that. So keep an eye on that as well. I think technically gold looks okay and favours more dollar weakness maybe, but I'm open-minded to both outcomes, so just have to wait and see. Anything else on the charts, guys, that you wanted to highlight?
Nope.
Not really. No, just picking up on a couple of news stories posted this morning. There's a 25-year-old man becomes the first in the US to get coronavirus twice, with second infection being more severe.
That was after Donald Trump last night said he was immune and wanted to get in the crowd and kiss everybody. Did you see that?
Yeah, lovely.
They love me.
Nice.
They want to kiss me.
So that's a full-on story. He was tested positive back in May twice. The symptoms weren't that bad. He then tested negative twice over the next few months, and then he's positive again. He's the 5th person worldwide that has been known to sort of get coronavirus twice.
And the symptoms are worse second time around, apparently.
Yeah. So, and also Johnson & Johnson has paused its COVID-19 vaccine trial over a patient exhibiting an unexplained illness. So they're all struggling.
That will be the denting sentiment this morning as well, I thought.
Yeah, exactly.
Another setback in the hunt for a vaccine. I think it's not going to be easy with any of these. I think there'll all be sort of rather than cures, there'll be things that just help it, won't they?
Yeah. They reckon that alcohol is probably the best thing for coronavirus.
With another lockdown coming, that's good.
Yeah, just drink.
Stop smoking though, so they'll better start smoking again.
It'll strengthen up your lungs, won't it?
It's supposed to be good for it, yeah.
Yeah. Okay, gun to the head stuff. Let's have a look at that, shall we? So Steve was back yesterday, and he came back with a win on FTSE. Unless I'm mistaken.
No, smashed it.
Not going to bother showing you though, Steve.
No, I know. Can't believe it. I'll have another week off.
Okay, free trade yesterday. I went long of Aussie yen. Ian went short of sterling yen, so we were head to head on yen there. We both lost, unfortunately, which can be the way. I was stopped out for a 1 hour loss, and Ian was down 0.19R at the 9 p.m. close. But Steve made 17.6 on the FTSE for a 0.85 R return. So we lost a little bit of money overall yesterday, but nothing too drastic. Overall, still trending higher, but very much flat over the last few months or so. So we do need to try and get that moving on, but we do need some movement in the markets as well to help us. So hopefully we'll start to see things pick up. Anybody got anything today?
Yeah. Me. Steve's first. No, you're winner's honour.
Yeah. I'm going to go FTSE. It's just having a little bit of a pullback now. We've formed this treble top here. This is only on the hourly chart. We've broken the neckline.
Don't see many of those.
You don't. 59.90, the ideal level to sell, but it's trading 59.84.7. I don't mind taking 84 in this. 59.84. And stop really should be above the, let's put it above the swing highs. We could have it a lot closer. In fact, I'm going to go a lot closer. I'm going to go 24. And the target on this, well, let's look for a 50% pullback. Where's that come in? Well, let's do the 61.8. That looks a lot nicer. 58.94. I like to keep things rounded, just in front of the 58.88, 61.8. Oh, did that wrong, didn't I? How's that? 2.2 to 1.
That'll do.
Getting short 59.84. Stop at 60. That should be 24. All fingers and thumbs this morning. 2.25 to 1. Targeting 58.94.
Perfect. Good luck.
Cheers.
Ian.
Dollar index got to be in it. I'm going to get long at market, which is 93.23. It's broken out of this previous swing high, and I'm hoping that's just a little retest. A stop under here, which is the overnight swing low at 93.11, and targeting that 78.6% level at 94.17, giving 7.8 R. I doubt it'll get it. This is a 1 hour chart, so but you never know.
To be in it to win it. Okay. I'm going to take a look at Euro Sterling. General trend is positive on the daily chart. We've seen a bit of a pullback in recent weeks from this swing low to this swing high, actually down to a 61.8% level. And so far we can see that it's held quite nicely. Got a green candle at the moment, which obviously got a fair way to go in the day before that confirms as a green candle, but I like what I'm seeing so far. If we zoom into the 60-minute chart, what I've got here is a nice range that's formed between 90.25 up to 91.57. We're at the lower end of this range at the minute. We've just posted in the last hour a bullish outside candle. So seeing those at the lower end of a range is quite a nice sign for me. I'm not overly keen on what I'm seeing at the minute on this candle, but we're only 8 minutes into the hour, so things can change. But I'm going to buy that here at 90.45. Going to put a stop loss below the low of this range at 90.20. Targeting a move to the upper end of this range at around about 91.55. So 4.7 R from here if that plays out.
Good luck.
Got to be in it to win it, as they say. So there we are, 3 trades for today. Anything else to add, gentlemen? I think we've gone through most of the news. Obviously, we had Boris yesterday in the UK talking about the 3-tier restrictions that are going to be put in place across the UK. Only Liverpool City so far is in the 3rd category, which means that they will be shutting pubs and preventing people from meeting indoors and outdoors. I didn't quite follow it all. I'll take more notice when it's us that's in the 3rd tier, I guess.
Yeah.
Essex is looking quite good though, isn't it?
Yeah, if you look at the maps,
he's trying to put a kiss in death, hasn't he? Isn't it?
Sheffield was looking a bit precarious though. There was
Sheffield's well
numbers.
dodgy. Yeah.
I mean, even without coronavirus, it's dodgy. What's he got there?
Yeah.
Sorry, I'm on a call, mate.
Got some breakfast coming in.
Look at that.
Advertising.
Yeah.
Okay, data-wise today, we've got German ZEW index, which in the past has been quite a decent market-moving number. I'm not sure it's got the same sway as it used to have, but the previous reading was 77.4, so we're expecting something in and around that. I don't actually have any expectations for that. I've just got what it said previously. That's out at 10 o'clock today. And then we have US CPI at 130. Prices to rise 1.4% year on year, and core CPI to rise 1.7% year on year.
It's used at 70.5. Expected 70.5, last 73.9.
Okay. More Brexit chats expected today as well, so there could be some potential moving headlines for sterling and euro. Aside from that, I think we've pretty much covered everything.
Lovely.
Yeah.
Lovely.
Brilliant.
Right, well, have a great day, everybody.
And
we'll catch you tomorrow.
Cheers, guys.
Yeah.
Bye-bye.
Bye.